How are you today?
You have to be careful how much credit you open.
You should be aware of how much credit you have open. I'll talk about that. What counts against your credit score? What doesn't count against it? Yes. Repair it immediately. Yes, you should be looking at your credit report on a regular basis. Here's the deal. When do you think you guys should look at your credit? Every day? No, definitely not. I'm even going to say no to that one.
At a minimum, you should get your annual credit.
You should look at your credit at least once a year on one of the free sites. Okay? I used to tell people to go to annualcreditreport.com, but they changed the site and it's very difficult to get your report. They charge I don't like it. So I don't care where you go, but you should get your credit report with your credit score. And there's a difference between credit scores, and I'll talk about that for you in a second. First of all, when we give somebody a loan, does anybody here that was not in my class yesterday answer this question? What determines the final interest rate that a borrower gets on their loan? Put your hand down. I'm going to have to hurt you. Credit score would be part of it. FICO score would be part of it. Your debt would be part of it. Payment history would be part of it. Okay, look, I'm going to help you guys out here, all right? It's like hangman, okay? It's a 4-letter word. It ends in the letter K. Be careful what you're thinking. Who said risk? You were in my class yesterday, weren't you? No? All right. Risk is the correct answer. Risk. I hear things like bank. I hear luck. I hear 203K. I hear 4. All right, you're going to want to write this down or lock it up. I'm going to give you something important about mortgage lending that has to do with credit and everything like that. The higher the risk the borrower presents to the lender, the higher the interest rate on the loan will be. Period. And each and every loan that is done is as individual as your fingerprints. Your loan is different than your loan, is different than your loan, is different than your loan. Why? A different mix of things. If you eat soup, aren't there like 20 ingredients that go into making a soup? If we want to give somebody a loan, your 20 ingredients are going to be different than your 20 ingredients, just different than yours. So risk is the ultimate determination. All the things that come under risk might be how much down payment did they put down, what kind of loan are they in, all of those kind of things. But that's all in risk. So the higher the risk, the higher the interest rate on the loan. Fair enough? All right. Let's talk about, I heard a couple of people say this word. FICO score.